All right, I'm gonna get started. Good afternoon to everyone tuning in. This will be recorded for anyone who does miss it. So if you do have to leave during the session, then you can catch the recording. All right. So basically, just wanted to give some focus into what's going on in the market and what we can expect going forward. As traders, we always want to, of course, trade what we see, but a lot of times in this market, you know, things that can be unseen or things that could have been um, that could have gave us a warning earlier, and then we see the move happen. We could have took precaution if we would have just knew, to look at our charts differently or just not to have a bias. Sometimes we do get caught up in the market moving up and we're bulls now, right? And then the market moves back down and we're bears again. So sometimes you want to pay attention to the market's patterns just to get an idea of what may be happening next, just so you can position correctly and not get caught up so much in these big moves where our FOMO can kick in and we forget why we're here and what we're doing. So here we're looking at SPY, and we can see I think last time we spoke, we were talking about this box here that was being created here, where we were just basically consolidating, right? We get down to 378, we go back up to 385. We go to 380, we go back up to 385. We go to 385, we go back down to 380. And we did that for, what's this? How many days? 8, 12, 13 days, right? 13 days of consolidation. So the common rule is, the longer the consolidation or the longer of the base, the bigger the breakout, right? So there's a lot of consolidation. That's just a lot of pent up energy. And, there's really no decision being made yet if we're going to drop or go higher. So it's just a lot of, either money on the sidelines waiting or, traders just waiting for a break of each range so that they can get in. So once we got a break of the range, finally, we can see we got this big, nice move up in a matter of days. These are the moves you want to catch, right? These are the days we scalp. We have no bias as we are traders. So, we come in the market just taking what the market's giving us. But during these days, it was pretty much, buy at support at the bottom here and sell at resistance. And we did that for a couple of times. Once I noticed that we were just going to consolidate for a while, I've dealt with that before. In these markets, you'll see consolidation. You'll see consolidation here, right here. It happens a lot, and when you see that, you take it for what it is. It's just that the market doesn't know which direction it wants to go yet, so it's just kind of just moving in and out until it does, right? So this is just another instance of that. And then once we broke out, you see it was a nice clean move up. Now, where are we again? Back at our trend line, just about. This has been our trend line on this downtrend since all-time high. Okay. So here we hit it in March, rejected, fell. Here again in August, rejected, fell. December, same thing, rejected, pulled back. Tried again. I think this was CPI, gapped above it. So now we had a lot of people get bullish because we're above the trend line. A lot of traders, just like we're looking at this chart, they're looking at the chart too, and they can see that we were at, this resistance, which was that trend line, and we got above it. So that pulled in a lot of buyers, more buyers, because they're thinking, oh, we're breaking above, we're going to go higher. And we actually ended up hitting that 410 and rejecting right down, right? And breaking right back below that trend line. And not only that, but retracing from 410 pretty much to 380. And I think in the last video or the video before that, I mentioned that that was a possibility where we could go up, touch this 410 area, get the bulls excited, and then, take them back to town. And that's pretty much what happened. So, that was, that's a scenario. That was a possibility. I'm all trading's about possibilities and making sure you're on the higher side of that, right? So that was a good opportunity to short there because now you have that type of liquidity where you could use that to sell back down. The market moves in liquidity. Okay, we have to have money coming into the market to move money out of the market. Same time we have buyers, we have sellers, right? So there's always money moving around. And we have to remember that. Just because we're looking at candles, we cannot forget that this is money being moved around. For big moves to happen, a lot of money has to be used. Not money like retail has. I'm talking big hedge fund money, right? So when you see these type of moves, you have to follow through because we're not moving this. I'm not going to move this with my money. The group's not going to move it with all our money combined, right? This is huge money. So when you see these type of moves come, okay, some real buyers are here, right? When we see those big green candles, we know real buyers are here. When we see those big red candles, we know real sellers are here because they're selling a lot of money, right? So here we are, back at this trend line. So once again, we have scenarios that can happen. We can break above and we start headed back up, right? This right here is nothing but fair value gaps. So it's pretty much just saying where we can retrace to. Just something new I've been using. But it just happened to match up with this trend line and where we're getting up to. So we're coming in, right? Because the market doesn't just move straight up, it doesn't move straight down. You have moves up and you have retraces down. You have moves up and you have retraces down, right? Nothing's just a straight line. I can go back all the way to just this year or last year and we can see, right? Moves down, pull back, or move back up to retrace before the next move down, right? It's been happening. If I could zoom this out, it's been happening all since 2021, since the bear market pretty much, or the downtrend started. We've had big moves up, down, and then retraced up. Big moves down, retraced up, big moves down, retraced up. Big moves down, retrace up, et cetera, et cetera. It's continuing to happen. Big moves down, retrace up, right? Now we've retraced and we're hitting these retracement areas, doing it again here. So when do we, start to retrace again? We don't know. But this is the area I do want to take caution at because we're right here at this trend line and history has repeated itself how many times, 3 to 4 times where we've hit the same area and rejected before selling off. And what's the reason we're up here now anyway? CPI? I mean, you can say that, but not much really has changed, right?
Rosemary.
Oh, 1 second. Hey, Rosa, can you mute your mic? I'm sorry. You hear me? I'll do it. Thank you. But yeah, so we've hit this trend line multiple times. So this is another instance where you should be taking caution, right? This is one reason I'm taking caution because of this trend line, and there's another reason I'll show you afterwards of why I want to take caution as well, and it has to do with the VIX. But these are just market patterns that you start to learn, and you start to see, things happen over and over again, and it's like, okay, well, I've seen this before, so how do I take action, right? Because if we're watching this market, and as we continue to watch the market, we learn from the market, and I can tell you all the things in the world or what to do or whatnot, but in experiencing the market, time in the market, watching the market is how you learn the best. Looking at these charts, how you learn how the market moves, right? So this helps us to get ahead of things that could possibly happen. We're running into, right at this trend line and earnings is about to start, right? So earnings can either help us or harm us. So we'll see how that goes, but there's so much talk about the recession and whatnot, and earnings, I don't think is going to be much better, right? I don't think we're going to see those higher numbers like we've seen in the past because conditions have changed, right? Things are more expensive. People aren't spending as much, right? So that has an effect on companies' earnings and their progress or whatnot in their outlook for this year and going forward. Um, so, this is a time I do want to take caution. There are some names in the market where I've said, you can start building, positions on. When I say positions, meaning long term. There's some good, I say, valued stocks out there, that are getting pretty cheap, in my opinion. But at the same time, there's still a lot of fluff in the market in other stocks. And I'm still pretty much a bear on Apple. So until I'm until I see Apple retrace to where I want to get it at, it's gonna be hard for me to be bullish on the overall market when Apple has such a large market cap. But here we are at this trend line. So going into the week, this is the daily chart. I want to see if we can close above this trend line. If we do, you may see an extra move up into this 407 level on spot. But I don't think this 400 level is going to go either. I do think we'll probably retrace. We'll maybe hit 400 and then start to retrace, maybe back here to 395 and try to hold that, or even 390. As long as this 390 holds, the bulls are going to be in control. But at the same time, like I said, we have a lot of earnings coming up. I think Tesla's is on the 25th of January. We have Netflix coming up, so these can kind of give us an idea of what's going to happen or how the numbers are going to be looking going forward for earnings. So, got some big weeks coming up, and we just want to make sure that we take our time. I have been watching some bearish positions being opened, not for any time soon, but it looks like some bears are positioning for April. We entered some Apple puts, and there's some other stocks that I am looking at to potentially open some put positions for April on, because I just think, the puts I'm looking at and the April puts, or puts in general right now, are fairly cheap. And I'm going to talk about why that's the case right now too. When we were pretty much down here, puts were very, very high, right? Some of them had 6x, 7x, 8x, depending on the time you had. If you had longer time, of course, you probably, didn't have the 10x and 20x's, but still the long-term bears, they were eating, right? So during that time, they didn't buy puts down here. They were buying puts while we were up here, right? They were positioning, just giving themselves time for when the move did happen, then they could go ahead and make their money and exit out while everybody else is chasing. And that's really the mindset of the market. It's the psychology of the market, right? They get us so bulled up, right? We all bull market. So here we are buying everything, right? And then the big boys or the big hedge funds or whoever, they pull out their money. Okay. And now we're the only ones still buying. And what are they going to do? They're going to wait for the market to retrace, get back to a level they're comfortable buying, and then they'll buy again, like they did here. This huge candle. We didn't do that. Retail did not do this candle. This is all hedge fund, right? We can't move this much money to have this type of candle, right? But they were selling up here and they bought back here. And now we're up here again. And what did they do? They started selling. People got caught off guard, and we ended back up in the 380s, right? I want you to think about it like the market like this, okay? Would you rather be buying food at 400, at 405, 406, or would you rather be buying food at 380? I'll take the 380. That's $40 off. I'll take that, right? That's how they look at the market, right? They're like, oh, well, it was a better deal down here, right? And this is without moving averages or any of those indicators on right now. I'm just talking strictly price action, right? And buying liquidity and selling liquidity. They were comfortable buying here and they were comfortable selling there. Yeah, it could have went up higher. Maybe it did go up higher, right? But did that mean they bought back in? Probably not. Okay. Same thing here. You got this consolidation. They bought here. As soon as that CPI news came out, they were like, okay, the money on the sideline was ready to go in, and they bought, right? And now they're buying, but when are they going to sell? Well, I'm thinking they're going to probably start selling maybe some here, right? At this trend line again, because they've been doing it prior to in the past, right? So this might be a time where we start wanting to build put positions. And I've been mentioning it for the past month of when I wanted to, and this is the area I wanted to, right? I said, it's better to short here than it was at 380, right? These are better opportunities to get shorts off than trying to go short here when we were just consolidating and you didn't know. But now we've kind of made this move up, and now we're at this trend line, okay? So the other reason I want to start building positions is, and this is, when I talk about building positions, this is not like tomorrow the market is going to drop 200 points. That's not happening, right? But, I mean, unless something crazy happens. But I'm talking, month out, 2 months, 3 months out. Because yeah, it may sound like a long time, but when moves happen, they happen fast. And as we know, red candles form a lot faster than green candles. You can be in a bull market one day and it took you a year to get there. And then in 3 weeks, you can wash those gains away. We still haven't seen a real move down. Even though these have been some nice, rallies up and moves down, and the volatility has been great, we haven't seen a real move down yet. So that's not to say it's going to happen, but it's just, you want to take caution at all times, especially in this market and in these conditions, right? The Fed's still raising rates. They have not talked about pivoting at all. We're still in the quantitative tightening period. So that's money's going in the market, right? So not every stock is going to get that love that we were getting in 2020, where you can just buy whatever, right? Value stocks are going to get the love. The stocks that have the capital and the cash and the positive growth and all that, that's going to be where the money's going. And so it's just time to be cautious. So I'm looking at VIX here, and right now the VIX is around 1834. VIX is a measurement of volatility in the market. Right now, that pretty much just says that there's no volatility in the market. There's no fear, I should say, right now. It's a little fear, you talk to a couple people, but right now, this is showing there's not that much fear because this is low. But if you zoom out, and this is a daily chart as well, every time we start getting around 18 on VIX, maybe a little lower, 16-ish, right? I could just say this is a zone. If I just move, let me see if I can do that. Yeah. All right. Okay. So I've been talking more about supply and demand lately. And that's just like, we were talking about buying liquidity and selling liquidity, right? Supply and demand, that's just, you have a lot of supply, then the demand may not, you may have the demand, but you have more supply than demand. So things might not move up, right? But when you have more demand and supply, that's when things move up. Okay. But right now, this is a supply zone, right? So this is where the market's looking for buyers. Hey, where's the buyers at? And it's every time we get in this area, what happens in the VIX? We start to bounce. Right? And remember, this is a daily chart, so it might take a couple weeks. This might be a week here, and then this be a week. I could go to a weekly chart too, and I'll do that afterwards. But you can see every time we get in this zone here since 2021, we bounce. Got in the 18s, bounced to 36. Got back and got in this area, retraced back down to 18. Got to 18, bounced back up to 36, 34-ish. Now guess what, we're back here. So, I mean, if history repeats itself, guess what happens? Go right back up. And this is the time where you want to be cautious buying long or going long on a lot of things. And I'm just saying, like, we can play, we can scout, we can day trade, call side all day. But, and you, I mean, it's still a swing, you can make swings in this market. But what I'm saying is, we don't want to be overly bullish right now while the VIX is dropping into this supply area. Okay. Um, so that's one thing. That matches up with what we're looking at in the SPY, right? It's correlating perfectly. You got us getting down here on the VIX, and on SPY, going back to SPY, um, we're hitting that trend line. So that's just two things that's telling me be cautious. Now there are some good charts that I'm seeing in the market that I do like, individually, names that may have some relative strength or weakness towards the market. But overall on SPY and indexes, I'm being a little cautious. And certain names that I'm thinking still has a lot of room down, like Apple. I'm gonna always push that until I see it lower than it is, because we've seen that. We've seen them take down all the smaller stocks, all the, pretty much every stock in the market pretty much has dropped, right? A lot. You've seen Meta get, destroyed, and now it's starting to bounce back. We've seen Tesla finally start, falling. Well, not started, it's already fallen. Now it's starting to be accumulated and may bounce from there, but it's falling a lot, right? Apple really is one of the last generals that hasn't failed yet, and that's the end of a bear market. When Apple, the last general, falls, that's when you can say, okay, now we may be towards the end of this bear market. But until then, I'm still being cautious, and you know, I think we can see some pullbacks. And like I said, if Apple pulls back, which if we look at last week, had a lot of relative weakness compared to the market. Market was moving up, 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 up. Apple wasn't doing that. Apple was not doing that last week. If I go to the daily chart, I really wasn't even going to talk about Apple today, but you can just see like Apple's not making the same move everything else is, right? And if I go to this monthly chart, because these monthly bigger time frames can tell you the probability or where we can go, right? I won't say a probability, but it'll tell you where we can go. Okay. This was 2020. Apple was basing here at 108 before it made its move up. And remember what we always say, like um, prior resistance can become support. Okay. So right here, this was a prior resistance area where it took a minute for Apple to get above. And this is that 130 area. So now Apple's holding on to this 130 area. But if it doesn't, guess where we're going? If this 130 area starts to get closed below, because right now we're still getting monthly close above it. If we start to close below, we got 120 and we got 110. Right. These are the targets. Those are my first two targets. And I've been speaking about the positioning I've been seeing in Apple, right? The bears have been positioning for, April and a little later in the month, for Apple to be below a certain number. So you want to take caution there because the charts are telling us, hey, we're still in a downtrend on Apple, right? Look at that. That's as bearish as you can get on a monthly chart. That's ugly here. That's the most bearish candle right there, right? So that's reversal wise. That's showing you we're about to reverse it. I mean, we've pretty much been dropping since, but this is something you want to keep in mind because this is the big market cap. This is, a huge percentage of the S&P 500. So if this starts to pull back, you can't expect the SPY not to, right? I'm gonna switch charts real quick. Let's look over at Webull. Let's see. 1 second. You can see both now. All right. Reason why I don't really like to record using my Webull is because on Spy, I just have too many levels on there, and it's hard to see. It wouldn't make sense. But with the moving averages on as well on Spy, you can see we are extended from this 8. Okay, and that's another reason we're extended from this 8 MA. 8 MA is at 390. This is on a daily chart of Spy. We're extended here, and we're at the 200 MA. Yeah, we closed above it, but we're still at this 400 level, extended. Not the time to buy. What we want to see is we want to see either this 8 MA catch up, right? Catch up to this candle, we consolidate, boom, make a move higher. Or you want to see us hold above this 200 MA before you start to make another approach that going, long for the next move up. Because when that happens, if we do start to catch up and the 8 MA starts to catch up and we're holding, like I said, next move up, we can go to that 407, 410 area that we tested before we sold off last time. But, that's just another reason why you want to be cautious on indexes here. Tesla. Tesla. All right, so just looking at Tesla and monthly charts. We were just talking about monthly charts and Apple. Well, look at Tesla. This was 2020, right? This was prior resistance. And then it went up higher. Here, once we lost this 160 level, it was a clean move down. Why? Because that was a big level that people expected buyers to step up. When they didn't and couldn't hold it, it flushed down fast, right? I'm still sick because I think we had those 200 puts for Tesla for like December, and we bought them in like October. I promise you, who the hell, that'd have been the craziest bagger. But you can just see like how we're back in the 220s. 2020 levels, right? So that's not to say Apple can't do that. We just seen it. We just saw it with Tesla, and people thought Tesla was untouchable. Okay, so that's just something to keep your mind off of being biased and just thinking this market can just go up, because that's a tough ride there. When you say you want to be a long-term investor, this is what you got to deal with, right? But people were comfortable buying up here, but no one wants to buy down here. Everybody's scared to touch it now, which is crazy to me, because this is the time as a long-term investor where you want to buy this type of company. Nothing about the company's changed. Elon's doing his thing or whatever, with Twitter and stuff, which can, make investors a little upset. But the company is still going to be here. This company's not going anywhere. The innovation's not going anywhere. So it's like, this is the time you want to buy. You want to buy when people are terrified to touch it, right? But you can see when you have good companies. Now, bad companies, we don't touch those at all. But, this is the monthly chart. So speaking of Tesla, we've gotten to 100, that 100 mark, and you started to see buyers step up. I always talk about psych levels, those even numbers, those the hundreds, anytime you see a stock around 100, it's in, like, let's say it's most likely, let's say the stock trades at 110 and it goes to test 100, you're going to see buyers try to step up at 100. It's just a psych level. It's something simple for somebody like the everyday trader, or let me say everyday investor, to just say, okay, well, I'm setting my buy limit at 100. So when Tesla gets to 100, it's just going to buy it automatically. And that's what happens. So when you see that type of move, hey, that's, once again, this was a big candle that came right off this 100 level. It didn't touch 100 exactly, but people were comfortable buying down here, right? And now we're starting to see some consolidation in this area. If I was on TradingView, like if I go over here and I type, I just show the consolidation in a rectangle form. I like to draw these rectangles just so you can see what I mean by like this consolidation, right? So like here, we've pretty much been in this range. That's about it. Pretty much been in this range since end of December, right? Everything else has made nice moves, or for the most part. We've seen short squeezes happen, you know, everywhere. BBBY, all of those making moves again. Back up, Carvana squeezing, which by the way is not healthy for the market. And we know that. That's another reason I'm taking caution, because when we start seeing those memes move like that, that's not a good sign, right? But we've been consolidating in this area. So here, buyers are keeping this up. So this is, there's four stages in the market. You got your accumulation, your distribution, and then your uptrends and your downtrends, right? This looks like accumulation. This looks like people are comfortable buying here in this area between 100 and 120, right? And we could possibly see a move back up before we even try to move back lower. That's usually how it goes, right? With these type of companies, you're not just going to see it just flush through. Even with Meta, I think when Meta went to 100 at first, or what was it? Yeah, whenever it went under 100, it wasn't the first time, was it? What else was that gap down? But you can see, like, soon it gapped down under 100. That's the only way. Where did it? No, they broke it. But even here, on this daily chart, when we got to the 100 level here, they at least tried to hold it up some before it fell. And then it got reclaimed and never was seen again, right? Tesla, we could see it at the 100 level again, but once we break out of this range, I'm going to say I would wait till like 125. Like over 125, Tesla has my attention. Just because it has a lot of short still accumulated there, but we have some buyers accumulating too. And we could see a move up, because right now you got a lot of bad news that came out for Tesla. Them discounting their cars, which, you could be looking at that as a bad move. And it did gap down off of that, but once again, it's been having some bad news and still holding up. Like, it's not dropping anymore. It's kind of just accumulating in this area. So that's something to say, okay, maybe the buyers are going to step up here and could at least move it back up to at least try at I'd say 140, right? So over 125 on Tesla, it does have my attention. I am not in the camp of trying to short Tesla right now, just because you short something like this right now that has so much fuel, and one like positive news comes out and you're toasted. Because this thing will squeeze like 10% if some news comes out quick, right? You'll wake up and it's up 10%. So I'm not in that camp of trying to short it right now, but I would rather, in that 122 close on Friday was a positive for it, but I want to see it get over 125 and hold. If it gets over 125, I think we can see 130 fast. That is on my watch list for this week. If we do see the market hold up and Tesla can pull over 125, that is on my watch list. So I think we can get a nice move off of that just because of this, right? Nice consolidation. The longer the base, the bigger the move. Remember I said that earlier. Tesla, if I look at it with the EMA zone, here we are. 118.10 is the 8 MA. We want to hold that. We also have the 20 MA here at 125.07. That's why I said 125. It just matched up perfectly with this 20 MA. So we want to see us get over this 20 MA. Get over that. I think we can see a nice move. You're starting to see some volume here. There's some accumulation going on, right? 3 times. And when you have something like this where it's just not really extended yet, you're going to get a move soon, because remember, it's just consolidating. So you're going to make a move up or down. I'm leaning upwards more than down, but this could also be consolidation for the move down. But I'm leaning more, at least a bounce upwards to this 130, 140 area at some point before we even try to move back down and test these hundreds. Like I said, unless something crazy happens in the market. But that's something that I'm watching for sure. Let me look at it on a weekly chart. Weekly chart. Overextended from the 8MA. 8MA is at 148.60 on Tesla. So, you know, anytime you get too extended from the 8MA, that is not a good opportunity to short. You do not want to short that. It's just the risk to reward is not worth it, because now you have that, you know, price likes to gravitate towards these 8MAs. And you want to go against that. I mean, it's already extended a good bit. So I'll wait. Even if you wanted to short Tesla, I'll just wait till they got back up here to try to take a short, than to just try to short one here. But like I said, I'm in the band of thinking this might be a small, don't even take this pattern serious, but it looks like it could be forming a small inverted head and shoulders, which could be, you know, a positive. And then we got this hammer here. So we'll see. You know, these are just talking about probabilities, but I'm looking at the upside as a higher probability right now than the downside. What else did I have? SE. I've been speaking about China for the past couple of months and how, you know, China's been getting destroyed in the past 6 months, and now the past 2 months has already recovered a lot of those moves. SE has not. Okay, Baba has. Okay, Baba, explosive. From $58 to $117 in a matter of 2.5 months. Okay. That's explosive. That's some money there. That's some people that want this stock. I mean, it was valued fairly cheap here. Like, this was a buy zone where I should have got in. And I'm still upset because we had long calls on these too. That's why I said I need to hold my swings a little longer. I think we had the 120s for the 20th of January. So, and they were like cheap. I think we could have got them for like 20 cents at the time. But this is just, you know, thinking about things like this, right? It's so far away from the 200 MA. I don't want to be short this stock right now. I would not be short China. If anything, I would be looking for pullbacks to potentially get in. Like right now, Baba, I wouldn't buy here. But if we get back down here to this 8MA, or we wait for this 8MA to catch up and we can hold here, I wouldn't be surprised to see Baba start moving back higher. That's on my list to trade all this year. But the reason why I brought up SE is because, one, I saw some flow on it. I think it was 70C a couple months out. I looked at the chart, and the chart looks like it's ready to bust a move. Why? It's in the right sector, right? It's with the China names. China has been getting a lot of liquidity, a lot of buyers. The reason why China's so sought out right now is, I was reading something earlier, Goldman Sachs sees the US growing at 1% versus China growing at 4.5% GDP. Okay, that was Goldman. Citibank has the US growing slower than Goldman at 0.7, but maintains similar China and world GDP. So a lot of these companies or hedge funds or banks are thinking China's going to be having a higher growth than us in this next year, which I do think too. It's just, you know, that's why it's, one second. Oh, tired reading something. Okay. That's why, you know, China's a name you want to keep on your watch list. Thing with China names is it can be a little iffy because of news overnight. You know, China market does open at midnight, or not at midnight, but around that time when we're asleep or, you know, about to sleep. So, and you know, you can't do anything about those positions till the next morning, right? There's a lot of times we see Baba up 5% in the pre-market or down 2%, 3% in the pre-market. So if you're swinging positions, you got to be very careful of that. But during the day for scalps, I've seen Baba give, you know, some great scalps, both sides, right? But like I said, I'm thinking about the upside. So Baba's already gave that. SE kind of looks like what Baba looked like before it started making his move up. Like Baba went from 58 to 117. That's a pretty much that's a double. It's already up 100% pretty much from then. SE hit a 40 low. So if we go double, that's what, 80? We're not there yet, right? We're not there yet, but that's a possibility. And you see buyers that were stepping up. Like I said, I got to go back and look. I'll post the flow to sometime tonight of what I found. I just got to go find it because I have all types of flow that I look at. But not all. I always say not all flow is good flow, right? But when you see flow like that in the 70C, so they're buying out the money. And I think it was a good bit of money. I don't look at the small amount. I want the millions, right? I think it was like maybe 1.8, $2 million put on it. And I'm pretty sure they had some time on it. So if I look at a weekly, because we want to look at bigger time frames here, right? Bigger time frames, because we're looking at swings, long swings, or swings from months out. So 2 minutes, not a 2 minute time frame is not gonna help it. A 15-minute time frame is not really gonna help it. We need to look at these bigger time frames. So we're looking at the weekly, we're getting above this AMA, or we're holding above the AMA, we're holding above the 20. And you get those those EMAs contracted like that, tight like that, where you can barely see them. You can't really differentiate the two of them. That's when you should start thinking, okay, a move's gonna happen. But the consolidation's getting tight to the point where a move's gonna happen, right? Like here, you get this big, you got the 20 MA and the 8 MA so extended. But before then is when the MAs or EMAs, whichever you use, were very close together, right? So right after that, boom. And now this could be accumulation. We've been, once again, in this zone. If I go and put a rectangle here in this area, pretty much been trading between 40 and 60 since September, right? When the longer the base, the bigger the breakout. So something's gonna come at some point. Maybe it'll be some news, we don't know, but something's coming. It's always gonna start breaking out soon. So this is another thing on my watch list to trade because, hey, SPY might not go anywhere. The U.S. market might kind of be in a downtrend or whatever, but there's always a bull market somewhere. Always remember that. There's always a bull market somewhere. Last year, market was falling, oil was moving up every single day. There's always a bull market somewhere. It's just our job to figure out where it is if we want to trade it, right? This is all if we want to trade it, because we can always just go and trade our same stocks that we always touch. But these are opportunities I like because it all makes sense. Right? Everything matching up where this could be a good move up. And I saw the Baba and I didn't play the Baba the best that I could by not holding, but I said if this one comes, I'm gonna take advantage of it. So we want to watch and see what happens. But weekly, I would like to see us get over this wick here. What's the top of this wick? Okay, so this is a 68.77 area. So that's the area of resistance I'm gonna watch for. Right now we're at 60.20. Let's just say 60.12. Let's go to the daily chart. Not too extended yet. Think we can get to 63. 63 would be my next target on SE. Get to 63, break that. We're at 65.72. And then we'll look at these 67, 68 area. But everything looks good, like we're gonna move up, and it makes sense to move up. Because I mean SE is a good company, you know. If we're watching Amazon, we're watching Baba, which watching all these e-commerce companies move up. SE's in that category, and not only that, it's a foreign stock in the right country right now that's getting money because China's under quantitative easing, right? Earlier I was talking about US being in quantitative tightening. China's in quantitative easing, so they're putting more money in the market right now. They're putting more money in China stocks right now. So that's liquidity. We want to follow that. We don't want to go against that. That's SE. All right, we talked about Tesla, SE. They want to talk about Google. We were in a Google swing for a minute, and it did pretty much what I thought. But it's not over. Now we're just kind of flagging it up here, and I like this chart. AMA starting to cross once again, getting tight here, but we haven't made a big move yet. We watch Amazon. If I go to Amazon, you'll see it had a similar chart, but Amazon's already made that move, right? Similar chart down here at 81.43. AMA in the 20 started to cross, and then boom, it went from 81 to now 98 in a matter of 13 days. Not even, and that's not even counting just trading days. That's 6 trading days. Okay? That's a nice move off Amazon. And that paid, right? So if we're looking at Google, you look at that picture, it looks very similar. Like very similar. Boom. Now this low was 84. The other one was 81, but same type of candle, right? And now we're getting tight, here, and boom. Now we should see a move. I'm thinking to 95 on here. Over if we hold 92 on Google, there's no reason why we can't resurface to 95. We just need the market to cooperate. So this is another one that's on my list for this week. Because Amazon did all that on a Friday. So we got tomorrow, we got 4 days for Google to make a move. We're gonna at least hold this trend on SPY and not break down. If we don't break down and we just hold up, I wouldn't be surprised to see Google, start to at least trend back to that 95 area with some strength. I don't see why it wouldn't. I mean, I know that Open GP, the AI, that new bot that's out, that is kind of bad news for it. Because if Microsoft or another company gets a hand of that, it could bring some competitors to Google, but it's still Google. And down here still, somewhere where as a long-term investor, I'll be comfortable buying. But as a trader, I'm definitely looking like in this chart setup here. So what I would want to see here is us hold 92. I'll be watching that tomorrow if we start holding 92 or reclaim 92. I want to look at possibly a 95 call, maybe like a week out, 2 weeks out, just to give us some time for the consolidation before the move, because that's what Amazon did. Just needed a little time, and they made a big move. So that's Google, right? Like I said, 95 should be the first target over 92, and then over that, you start talking 97, 99, 100, right back to that 100 level. Let's see. There's something else. Oh, Disney. Another one I should have held, but it's what it is. I still have time to get back in this. I don't think Disney's done. I like this inside candle here because I think the next time we break higher, we're gonna break at that 100 level. Only thing is we're a little extended from this 8MA, so I wouldn't be surprised if we have one more day of consolidation here on Disney, where we just stay inside this range. When I say inside candle, pretty much just means we're inside this candle here. Like this next candle was inside this one. So we really didn't make any new price discovery. We didn't go higher, we didn't go lower. We're just inside of it, right? That's that consolidation. So here, I would think we probably get one more because we're extended from the data May, and then we could see a move higher. Like I said, over that 100 mark. Just keep 100, that 100 as your level of interest. When it breaks above it, that's when we get interested in Disney again. The only bad thing that can happen right now is with Netflix. Netflix does have earnings, so we have to see how that has an effect on Disney. So, because of the streaming and all that, the streaming numbers and streaming services, we want to know how that's going, and versus want to know if that's progressing or is it getting worse. Because if Netflix starts to tank because their streaming numbers are down, then people might think, okay, well, streaming is not hitting on anything right now, so they might pull out of Disney. These are things you want to think about before it happens. But I think if Disney can hold this 8MA, now we do got a gap up here. And at some point, this gap's going to want to get filled. The better, the sooner the better would be better. So if we went down to back to 96.33, I'd buy this. If we came down, filled this gap, then I'd buy it. Or if we just consolidate, don't fill the gap, and then break that 100, I'd buy it. But I want to wait. I don't want to jump the gun on this. But like I said, when it does go, it's gonna go. You just don't want to jump the gun. You can wait and be patient for when it does happen. So those are some of my long ideas that I like when we do get to move long. Google, Tesla, SE, Disney. I'm not really looking to short those names. I talked about Apple. That's on my short list. And NVIDIA's on my short list too. MU already warned about their data centers and how they're not getting the same type of profits and stuff. NVIDIA has earnings on February 22nd, and they haven't said anything yet. So if they don't say anything before then that must mean that their earnings are going to be good, maybe. But I don't know. I don't think they can be good right now. I don't think the chip sector is all that stable. I mean, it's still a lot of uncertainty right now. Long term, it's still great stock. But as a short-term trader, mid-term trader, I'm not really interested in the video right here. I'd rather, where's my phone going? I'd rather it pull back some. If we look at this weekly chart, we really haven't went. Like it's still on this huge downtrend. And we're just talking about these big stocks getting hit and going back to their 2020 levels. Well, NVIDIA hasn't done that yet. When NVIDIA goes back to its 2020 levels, we're talking, from $70 to $90, which is a supreme buy for me. If it gets there, I'll buy with both hands if it gets here. But you still have a lot of room down, right? What's going on right now with NVIDIA? This area, prior resistance before it moved up at this 145 level, is now doing what? Being support, right? But I don't think that's going to last. I think either the earnings or they're going to warn early. Something's going to happen because the chip sector is still not strong. I think even SMH, which is the ETF, is coming to some resistance on the chart. I think. Let's see. So, I mean, even if you look at SMH, which is the ETF for semis, right? This is a monthly chart. The highest gone is 226 in November, 231 in December, and now we're at 226 now in January. So 3 times this level here at the top is capped our move up, right? On this downtrend, because we're obviously on a downtrend, right? Now, we could retrace here to this 242 level. That's a possibility. That would be a great short. But I don't know if we're going to even be able to get over this. We've been restricted. And I think now we're at that same area. So if you're a bear, this is the area you're going to be, happy about because it's a great risk to reward. You're like, okay, well, past time it's got rejected and going back down on a monthly chart. Now, we're on a monthly chart, so you need time, but these are times where you should start looking at puts, or building put position. I think I saw, let's see, what is the SMA? I think I was looking at NVIDIA. I think I was seeing like 140s, 150s for a couple months out. And the reason why I'm bringing up more puts than calls is because I haven't really seen call positioning happening on any stocks. Like when I say I've seen like short squeezes happen, I've seen short-term call positions open, but I haven't seen many call positions for, anything past March, April. And anytime in the past, I would see calls for far out, right? Ultimate bullishness, right? Not seeing that right now. So that's just something that's another reason why I'm cautious. But NVIDIA is on the top of my list if we do start to sell down. It has a lot of room down. It has a lot of room down. Um, Once again, we're extended here from this 8 MA on the daily. 8 MA is at 156. We're at pretty much 170. I'm not trying to be long here. We're at the 200 MA. We closed above it, but that don't mean anything right now. Because we closed above it here too. And then the next day it went up, gap down, and then we went from, even though I think this was probably earnings, from 187 back down to 138, right? So now we're making this big move up. We've had 6 days of bullishness. If I zoom out, we're still in a big downtrend, right? Let's see. Yeah, so, and at the same time, like I will say, if I was looking at this chart, you may have been able to target this area, this 187 area as your high from here. And that's what, 17 points of upside. But I think that's pretty much as high as you get, because this is pretty much the new resistance here. This area right here, you can see hit here, rejected. Hit here, rejected. Hit here, rejected. Now are we gonna go back up to this area and reject? We're about $13 from hitting that area again. But the downside, as I was showing you on the monthly chart and things, we have a lot more downside. And if you're going to have bad earnings, or if you're not going to be able to make the same profits because the data center and things are getting weak and you're not getting the same clientele, or and the supplies is more expensive, sounds like, a pullback can happen and your earnings isn't going to be that good. So, that's something that I'm watching for the short side. Because whenever we start having down days again, NVIDIA is going to be an easy short. It's going to move. I mean, this was a week, right? This was a week move. In a week, it went 13%. So on the downside, you can 13% on some puts to be great, right? But we're still in this area. Like, it really has not left this area since, when I say this area, like, it really hasn't left this area since November. It's been in this zone here. All the things that just happened in the market, and it really has not moved. I've seen SPY, bounce from 360 to 400 since then. Meanwhile, NVIDIA is still here. That tells me that buyers are not too positive about this right now, right? So why should we be? We don't want to be the first one getting caught up in the trap, right? But you have to have liquidity to make moves up or down. If you don't have new people buying in, how can you sell something? So don't fall for the trap just thinking things are just, oh, it's green today, it's great. Even though the chip market's down. No, there's a reason it's green today. It's a trap. You got to have liquidity. But we run with the traps. We'll run with it, but we just don't get caught up in it, right? If the market's moving up that day, we'll take it for what it is. But that doesn't mean that I'm going to change my bias of what may be going on behind, on a bigger, larger scale of things, right? It's the mindset that you got to have in this market, right? You got to have that short-term mindset to understand, okay, well, something's going on today, and the market might be going up today. Let me take advantage of this. But at the same time, you have to still be able to move on from that quickly. Even if we made some money or whatever, we have to be able to move on from that and still understand that, okay, well, why did that happen? Is there a reason that happened? Or, was there some news? No, it's just happening. Okay, that's noted. But if it's just moving like that and without any news, and I still know what I know, then I should probably stay with my my scenarios or your plan or whatever, right? You don't let just one action change your plan. That's the worst feeling when you change your plan just because one thing happened and then the next day or something that happens and you were fully prepared, but now you got scared out your position. You know, it happens. If you what's the movie? Um uh I'm missing a movie. But it was a movie that I was gonna tell y'all to watch in regards to that, but I'm sure it'll pop back up in a minute to my mind. Let me see. Oh yeah, that's why the movie is The Big Short. If you haven't watched The Big Short, that's what I mean by sticking to your plan. That's I mean, if nothing else, that's the real reason of sticking to your plan. If you've seen that movie, you know what I'm talking about. But other than that, I don't think I have anything else to discuss. Um, not really. Let's see. No, I think that's it. If anything else comes to mind, I'll post it in the weekly outlook channel. I do think we do have some speakers talking this week. I think they're towards the end of the week. But other than that, only thing earnings wise I'll be paying attention to is SI and SBNY earnings are tomorrow morning. That'll give me a good idea of the crypto space and these banks and you know what they're doing with that. Like I said, Netflix let us know what Roku and Disney's gonna look like. So those are good Simply plays. I think some more banks earnings are this week. So that's something I want to pay attention to as well. I think Banks made a big move up last week. Yeah, great move. Great move. But now guess what? Coming up to some resistance on XLF, which is the ETF. So we'll pay attention to this. We'll see how the rest of those banks earnings come out, and then we'll move from there. Like I said, if I have any other ideas, I'll drop them in the weekly outlook or in my market thoughts. Um, but let's have a clear mind going into tomorrow. Uh, you know, don't just jump at everything that moves. Let's be patient, stay disciplined, um, and take advantage of the opportunities that do present themselves. You know, a lot of times in the market we get caught up in the now and forgetting our basics, you know, or we get so caught up in, you know, the news and everything, right? Just follow your charts. Follow your charts. If your chart says we're in a downtrend, play it as such. If your chart say we're in an uptrend, play it as such. But also just understand, you know, that there is short-term, mid-term, and long-term outlooks to stocks. So just because a stock is moving in the short term does not mean that has anything to do with its long-term or mid-term outlook. All right. So keep that in mind. And we'll speak again tomorrow in the morning. Everyone have a good day.